You are listening to ChartingWealth.com for Tuesday, the 1st of August, 2017. My friends, as we look at these charts and go through them, I want you to realize this is the worst time of the year to trade. It is the summer doldrums. The market is up, down, sideways. Very difficult to read the charts. That is the way it always is in the summertime. That's why it's called the summertime trading zone. The fall-winter trading zone will be coming soon enough. That's when we get nice, clean, and clear up and down movements. That's where we made all of our virtual profits this last year pretty much, and we made it the easiest, so don't panic, okay? Do not panic. Now, we see the S&P 500 is down just a little bit for the day. Again, as we look at this new week forming, we just can't seem to get a crossover one way or the other, a huge downward departure. We're currently in a confirmed down move on the S&P 500, but it looks like the red and the blue line are just matted together. I guess if it was yellow and blue, we'd have a green line there because they are just laminated almost on top of each other. Why? Because as far as price movement goes, this market is trying to top out and track sideways. When you look at where it's topped out over the last 3 weeks, it's right about the same point. And that's what we're seeing, somewhere around about 247 on the S&P 500. Now, technically, we are confirmed down, which again, when we look at our 2-day chart, let's hone in on that for you. The 2-day chart has broken through the 2-day trend line. We really can't redraw it because we'd have to redraw it on a red candle. It is now actually a little less than parallel. The blue line represents the price percent oscillator, and it seems to be going sideways. Derivative oscillator still in the positive, still green up movement on the rectangular box that is the derivative oscillator, oscillates back and forth with price movement. But what we see going on, of course, on that 2-day chart, first day of the last the last day of the month, first day of this latest 2-day candle, is we see a doji, which means lots and lots of indecision, trending down. Now, we still have a positive derivative oscillator, like we said. If we hone into that 4-hour chart, what do we see? Well, that 4-hour chart again shows us that sideways slide for about a day and a half, again trending down, crossover there in the afternoon on Thursday the 27th is when we had. But when you look back, you can see about the same price movement all the way back to sometime around, the afternoon of the 19th, just in about that same price area. So again, sliding sideways, and the 4-hour chart, of course, has breached that 2-day trend line, and that 4-hour chart's headed down. Now again, if that 4-hour movement is enough, it will first drag the 2-day chart down. And of course, once it does that, it's heading in the same direction we've already established, where our weekly chart is already waiting. You might say, well, heck, the 4 hours down now. Why don't I go ahead and jump in? Because a small chart, when your medium chart, which is your 2-day chart's moving up, a small chart rotation down doesn't mean it's going to be strong enough to pull that 2-day chart over. Could it? Yeah, it's possible, but I mean, anything's possible. We are trend followers. We want an established trend to exist, want to back up on the short chart, and then movement over in the direction of the big chart and the 2-day chart. That is the weekly and the 2-day. So when we have this schizophrenia going on with the little chart, the medium chart's up, and the weekly chart is down, that is the longer chart, longest of our charts, you don't trade then. Okay, so we're waiting for this to settle out. That's what we get in the summertime, is we get this kind of jerking around. That's why there is the market adage, sell in May and go away, live to trade another day. And that's when the fall-winter trading zone kicks in. But we are practicing, right? We want to experience the bad times, the good times, the fat times, the lean times. It's all about practice trading. And we want to wait until we get good at that. And then, my friends, if you can clean up a few months out of the year, and you can, once you get good and can do this, you can jump in, Make money in the market running up or down using an inverse fund if it's going down. Clean up, make a chunk of money, and then pull out and let the sucky times go by and only get in when things are clear and clean and crisp and easy. That's the way to do it. First rule, don't lose money. Second rule, make money. Okay, let's keep pushing through these charts. S&P 500 on Monday down 0.06% the last day of July. What do we see going on with the Qs? The NASDAQ 100, it of course is in a confirmed down move on the weekly chart. It was down 0.42% for the day. We have a red open box candle. Derivative oscillators losing downward momentum, but the PPO seems to be tipping back over, going down in a confirmed down move. Let's take a look-see at that 2-day chart. What do we see it doing? Well, it appears to have topped out. We had a spinning top, lots of indecision. Now we have a reverse hammer moving down. Let's keep an eye on the derivative oscillator losing energy. And of course, most important, the PPO is actually trending down, moving toward the red signal line. So we do see a topping off and a moving over there. But again, still in a confirmed up move on that 2-day chart. What's going on the 4-hour chart? Of course, it crossed over going down. Well, it actually crossed over going down back on the 26th. It then popped up again on the signal line and then rotated back going down on the afternoon of the 27th. And of course, it's dragging down. So again, continue to watch. If that 2-day chart pulls over, then of course we're already in a confirmed down move on the weekly. So you would be looking for jumping into a down move trend following. Hasn't happened yet. We're waiting to see what occurs. Now, let's look at TLT. That's the 20-year bond fund. It's been in a confirmed up move since February. Slid sideways for a while down, then popped up. A little bit of pullback through about mid-May, and then shot up like a rocket in June up until right at the end of June, and then rotated over and then sideways through July. What do we see going on now? It's trying to cross over going down. Derivative oscillator's already gone in the negative, but the price percent oscillator has not. What do we see going on with the 2-day chart? Well, it has crossed over and going down. Let's take a look at that. Of course, it went down for, what, about 5 candles representing 10 days, bounced back up through the 24th of July, and then rotated back over going down. It's been in a confirmed down move since it rotated over going down on the candle ending on the 3rd of July. So it's been in a confirmed down move on that 2-day chart since then. What's going to happen? We don't know. As we look at this 4-hour chart, we can see that it's trying to cross over going up. And again, if things start taking back off, and again, remember, bonds are typically inversely related to the stock market. So when the stock market starts doing bad, people tend to put their money into bonds to try to make money, and vice versa. So again, if the market is topping out and rolling over, you can usually expect bonds to move up. So keep your eye on bonds. If the 2-day chart rotates back over, follows in procession to what's going on this 4-hour chart, looks like it's getting close, then don't forget your weekly's still in an uptrend, unless the week ends and it has crossed over going down. Not trying to be confusing here, just want you to know, weekly has to go in the same direction as the 2-day, little bit of a backup, a reversal in the 4-hour chart, and when it rotates over going in the same direction of those 2 big charts, that's when you get in on the 4-hour chart. And you start drawing those trend lines and following them, looking for every good reason to get out when you're making money, not to simply ride it in the right direction, make money, and then lose it all because you're too damn greedy to get out, take your money, and run. That's where we are on TLT. Going to go back to this weekly chart. Lastly, we'll look at gold up just a little bit, 0.05%. Of course, gold has now, with this new week, just happened over the course of this last day, has rotated over going up. Does that mean we have a weekly vertical crossover? No, it doesn't. If gold pulls back during the week, you can watch this line rotate back over and not be a crossing. If it does, however, and is still moving up at the end of the week, then of course we will call it a weekly vertical crossover. Did not have that on Friday, is trying to do that right now. As again, as we just continue to watch throughout the course of the week, we can see on the 2-day chart with gold, it rotated over going up back on the 24th. And of course, we've got 7 candles representing 14 days, 2 weeks, actually almost 2.5 weeks of up movement on gold. And again, continuing to rock it up on that 2-day chart. But again, what's our most beautiful chart that we have? That, of course, is the 4-hour chart on gold. It is a total trading chart, rotated over at about 116, going up as high as 120.66. Just beautiful. When this 4-hour chart does rotate over going down, all bets are off on whatever the 2 larger charts are showing. Because with gold, this 4-hour chart works time and time and time and time again, except in mid to late December and early to mid-January. Then it seems to start working again and works throughout the year, summertime included. Beautiful. That's where we are, folks, as we end the day on Monday. Go into the new month. Welcome August in, won't you? It'll get us closer to that fall-winter trading zone. We love you guys. Appreciate you listening, all of your questions. We're answering questions this afternoon. Of course, you can fire those off CW at chartingwealth.com. If you've not already subscribed to our daily market review, you do that at chartingwealth.com. With that comes all the goodies. The How to Read a Stock Chart video, the layout that we use at freestockcharts.com, instructions on how to sign up for our texting service. You have to be in North America. I'm sorry, it doesn't work for our friends in Australia, Indonesia, New Zealand, the UK, Europe, you name it. You guys write me all the time, sorry. But that comprehensive review and forecast, we always teach it. We always let you know. That text service is just handy for the folks that, I guess, want another extra reminder, but it's always available in that comprehensive review and forecast. Also, you get our trade worksheet, weekly and daily market worksheets. We provide all that to our subscribers for free, and you just go to chartingwealth.com. Again, you have questions, problems, concerns, you can email us directly there at the website under the contact portion. There's a little box you can fill in there, or you can just email us, cw at chartingwealth.com. C as in charting, W as in wealth, CW at chartingwealth.com. God bless, my friends. All the best. Hope you have a great week doing your practice virtual trades. God bless. Take care.